my friends. Chris Marcus here with you for Arcadia Economics on Friday, December 7th, with a quick video about the U.S. Treasury and interest rate market. For those who have been watching, and certainly, in my opinion, a well-advised thing to do, keeping an eye on the interest rates. Here is the benchmark U.S. 10-year Treasury. Had been as high as 3.26%. And in the recent months has come in quite a bit. Today we see at 2.88% in the face of unprecedented deficits, money printing that now we hear the Fed is thinking about reversing course and maybe may not continue with those interest rates hikes, as many in the Austrian community have talked about for years. But why is the Treasury market rallying? Again, got to remember, on Wall Street, everyone is trained to think during times of chaos, what's the safe haven assets is U.S. Treasuries and U.S. dollars. Now, there are the ways that things go and that people believe and have been doing for a long time and have momentum behind. And then there's also the actual data and evidence, which the difference between the two is that, yes, people are used to buying treasuries as a safe haven, although at the same time, when you look at any sort of objective analysis about the U.S. Treasury profile, I mean, you're lending money to the most insolvent borrower in history, likely getting a negative real interest rate when you factor in any sort of true inflation rate. Again, keep in mind that while the government numbers say, and the government numbers are already over the 2% threshold that the Fed often cites. Yet, if you look at John Williams of Shadow Stats, who simply calculates the numbers based on the old formula before it was tweaked, has inflation close to 10%. So the idea that U.S. Treasuries and dollars are safe haven, I would strongly disagree with. With that said, before we reach that break point where the rest of the world takes notice of this and reacts to it, I do continue to believe we'll see periods like this where as other assets are getting pounded, money will go into treasuries. Yet, again, look at what's happening in the world. We have petro-yuans, we have China, Russia, Japan making trade arrangements outside of the dollar. There was a story earlier this week or last week about Russia talking to India, trying to recruit them to consider non-dollar options. And really the way that it's been built up, it's probably going to stay like, it's like as Peter Schiff often says, the beach ball being pushed underneath the water, and you can push it farther and farther, but the more you put pressure on that, when the ultimate resolution comes, the higher it's going to go. Similar with the U.S. yields, they're low now, but again, when you just think about, would I lend money to this person and get a negative real interest rate? I certainly wouldn't. I think we're close to the point where the world, I mean, again, you're seeing it. It just has not been priced in yet. And that's the kind of thing that happens when you have markets that are as distorted and manipulated as the ones we're looking at today have become. So hopefully this helps clear that up a little bit. Leave your questions below. Love hearing your comments and happy to further explain this, but an important topic in understanding what's going on and being prepared and knowing how to make your own decisions. So with that said, again, hit the subscribe button and I will see you again soon. Thanks.